Hello and welcome everyone to the Equitymaster Investor Hour. I'm Sarit. I have Rahul with me as always. And,
Hi.
and today we have a very special guest, Dr. Marc Faber, author of the Gloom, Boom and Doom report. He needs no introduction. We were honored to have Dr. Faber as our very first guest on the Investor Hour. Like many months ago, he
Yes.
very kindly agreed to do that two-part episode with us. And we are thrilled, delighted to have him back again. So, Dr. Faber, thanks so much for joining us once again.
Well, thank you, Sarit, for having me on your program. And Rahul, it's always
Wonderful,
a pleasure
wonderful
to
to
be
have
with
you.
you and discuss with two knowledgeable young hands
Oh, thank you.
the world of investments.
Thank you. Very kind words. For the listeners, Dr. Faber also spoke at the Equitymaster conference in February 2019. And that was also, super well received. And, we were honored to have him as a keynote speaker. A wonderful experience. A lot has changed since our last interaction. The world has changed quite dramatically from a health perspective, from a wealth perspective, and so on and so forth. So today we want to spend the next hour or so talking to Dr. Faber and trying to sort of understand his perspective on various things. And, for those of us who've been reading Dr. Faber, I think my first interaction with Dr. Marc Faber would go back to 2002, maybe a little earlier. And it's always fascinated me in the way he's able to share thought-provoking ideas. And he actually introduced me, and I always say this in my introduction of Dr. Faber, he once told me, I think in 2002, 3, 4, that orange juice was an investment opportunity. I had no clue, in India, thinking that orange juice could be an investment opportunity. And it was such a, a breakthrough, aha moment that the world of investing is far bigger than just stocks or real estate or gold. Anyways, with that background, let's just kick this off. Sarit, why don't you go first?
Dr. Faber, last time we spoke, you spoke a lot about how the world is in a slightly difficult place and you're not very bullish on stocks. Has anything happened since then to change your mind? Would you be buying stocks now?
Well, I think I've always maintained that in absence of knowing where this money printing will lead to, that you have to diversify. So my base position is basically to hold a portfolio of about 25% of your assets in equities, in stocks, 25% in real estate, 25% in precious metals, and 25% in bonds and cash. And I still maintain this asset allocation. I think if I look at the market, this year, most markets are down and most stocks are down. Now, there are some markets that are up, such as the S&P 500. But if you analyze the S&P 500 as a capitalization-based index, then because of the nature of, say, 10, 20 stocks within the S&P, the technology sector, which has been strong, the index is at a new high. But if you use the S&P 500 different shares, 500 stocks, and you don't weight them, then the typical stock is still down. The unweighted index is down on the year. So the markets haven't done well. But still, what is remarkable about this, we are in a recession. Don't make a mistake about this. The economy in the world has tumbled, and some sectors have never tumbled as much as they have in the current environment, like hospitality industry, travel, and so forth. So this has collapsed, but household net worth is at the record because of the money printing, but again, the central banks have actually made matters worse in the sense that the people that have no assets, the poor, they haven't done well, but the rich people who own shares, because the shares have made new highs, they've done very well. In other words, since the beginning of the year, the net worth of Jeff Bezos, Bill Gates, and so forth has increased, but of 90% of Americans, the net worth has decreased and their economic condition. So it's a very bizarre kind of economic environment. It's heavily supported by fiscal policies and by money printing. Now, as you know, if the world was only printing money and nobody would be working, do you think we would achieve much in terms of economic progress? You know, if we all sat on the beach and in the mountains and nobody would work and we just had a central bank that would print money, where would our standards of living be? So the money printing doesn't create wealth. It creates the illusion of wealth. That it does.
Okay. And that's the thing that you've been talking about for years. So is there an end to this? Have you ever thought about when will someone call the bluff of the central banks who just keep printing money, and we'll actually have a judgment day for them, and then we move on to, you know, what some people call gold standard or something linked to that? Or do you think this will just continue, in which case the people who are taking the risk will be far better off than those who are more conservative?
After the judgment day, there will be hell for central bankers. I'm quite sure. Now, this judgment day, this is what preoccupies the minds of most thinking people. How will it come to an end, and how do you protect you when the end happens? You know, this is not very clear. That's why, in general, I suggest diversification. But I'd like to introduce one thought how it could end. As you know, at the present time, interest rates are near to zero, and in some cases below zero. Say in Switzerland, you can buy a 10 years zero coupon bond. In other words, it doesn't pay any interest. And you pay 110, and in 10 years, you get 100 back. So you have a 10% negative interest rate over 10 years, 1% per annum. In the US, you have next to zero interest rates. The borrowing cost of the government at the present time is probably less than 2%. And in Japan, it's also zero, below zero. I think the Achilles heel or the judgment day will come when, despite government intervention, in other words, central bank intervention, interest rates go up. Now you will tell me, well, the central bank can buy so many assets as to prevent interest rates from going up. This is correct, but you have to understand, if you're the reserve currency of the world, like the US is, the reserve currency only stays reserve currency as long as there is confidence, and as long as the country that has the prestige. And should there be pressure on interest rates for whatever reason, it could be that commodity prices go up, could be that consumer prices go up, or it could be that foreigners lose confidence, so they sell US assets, bonds and stocks and so forth. There are many reasons why they could go up. And if at that stage the Fed continues to print money to keep interest rates down, there could be a collapse in the value of the dollar is possible.
Okay. Mm-hmm.
That I would consider the judgment day.
Mm-hmm. Mm-hmm. But so far we know it's not happening because we saw in March, and we also saw in September that when suddenly there was a rush to exit risk, the only thing that appreciated in value was the US dollar. Gold fell, silver fell, stocks fell, everything fell, but the dollar.
Yes.
So
that is true. So far, this is correct. I think that in general, the dollar has begun to weaken.
mm-hmm.
Now, will it weaken much more? The positioning is in the futures market is that commercials are heavily long the dollar. In other words, they expect a rebound. The speculators are heavily short the dollar.
Mm-hmm.
My sense is it may rebound somewhat, but it will go down in the long run and meaningfully. I think the US dollar is very overvalued
mm-hmm. Mm-hmm.
compared to other currencies.
Mm-hmm.
But it hasn't happened yet, as you say. But many things take a long time until they occur. And when they occur, it starts slowly and then it goes with a bang. There's a tipping point at which markets move very strongly in one or the other direction. It's like commodity markets so far have been very benign or have been declining, with the exception of precious metals. But say you look at food prices, sugar, wheat, corn, soybeans, all have been declining. But recently, there have been 3 or 4 commodities that went ballistic. One of them was lumber, suddenly shot up almost 4 times from the low in March. And more recently, wheat and soybeans have been strong. And with inflation, we have this asset inflation, as I described, where stocks, bonds, real estate, and so forth have all gone up. And consumer price inflation has been relatively, relatively benign. But it could be that at some point the money printing leads to inflation for necessities. And at that stage, it will be very important to see what the central banks will do. I think they will continue to print money, in which case the inflation for necessities or consumer goods will actually accelerate.
Yeah. So I was also very intrigued about this portfolio approach that you have, because you seem to just have even weights, 25 stocks, 25 real estate, 25 metals, precious metals, and 25 bonds and cash. Is this a result of all your experience that the allocation, equal weights just work out in the long term? Or do you also change weights over time, or this is it?
I think I may change the weight at some point in the future where I would move cash and bonds more into equities. But you see, because of the money printing, some stocks have become inexpensive, but not that inexpensive compared to maybe the negative fundamental outlook. So you have, as an example, since the beginning of the year, Zoom, which we use now, is up, say, about 5 times in price. But you look at banks and at oil shares and tobacco shares, they're all down, in some cases double digit. Some emerging markets are down. Some currencies, the Indian rupee is one of the strong currencies, is only down 2% against the US dollar this year. But the Brazilian real is down 28%. And so forth. So the South African rand is down something like 20%, 22%. So we have had these big moves in currencies and in stocks. And I think that the value stocks that I just mentioned, the ones that have gone down so much, they're in a buying range, but I don't think they're that low when you analyze their fundamentals. I mean, I would take a bet and use some of my money to buy, say, with 10% of my money, some of these distressed sectors like oil servicing, resources, banks, tobacco companies, you know, stocks that are very neglected, overlooked, and hope for the best. If it doesn't materialize, okay, I lose 10% of my money.
Yep.
But you can also lose 10% of your money by buying the FANG stocks, Amazon and Apple and Zoom and Tesla and so forth. Actually, I suppose if history is any guide, these most popular stocks will lose minimum 50% of their value.
Yeah, that's fascinating that you mentioned value stocks as a good option from a global investing point of view. But what about India, Dr. Faber? Is there like opportunities in value stocks in India as well?
Dr. Faber loves India.
Yes, I mean, well, I think I would love it more if some of the valuations were lower. I think some growth stocks in India or the well-established companies, their valuation is very high. But at the same time in India, as you know, it's a very big country with a very large population and the market is very fragmented. And there are lots of young entrepreneurs that are starting new businesses. So I suppose that a well-managed company has a great opportunity in India. And I think if you're on the local scene, if you're an Indian, say, I would spend all my time on looking at investments in India because I think it's one of the countries that where the economy will exceed the economic peak of 2019 relatively quickly. You understand? Maybe in the US, the 2019 economic peak will not be exceeded for a very long time, maybe never, who knows? But at least in India, I can see that due to its huge market potential and due to the fact that many markets are not saturated yet, I think that the peak of economic activity is at the beginning of a very long-term economic growth period that could last 20, 30 years and lift Indian GDP to either number 1 or 2 or 3 in the world. You see that the issue here is we have a change in economic geography from time to time. As you know, around the year 1000, India, relative to the rest of the world, was a very large country and very large economy. It was in the south also never conquered by the Mongols. It always stayed India. Even Alexander the Great wasn't able to conquer India. He may have won the battle against Porus, but it was an undecided victory. In other words, his losses were so large that his general lost the appetite to actually proceed with the invasion of India. So I say, if you look at India in the year 1000, then the relative decline of India compared to the Western world, notably Western Europe first, and later the US, I think we could face in future, and some of my friends are arguing that Europe and America are committing political suicide. And if that holds true, then I think the Western world is rather going to have a relative decline, and the Eastern world will have a relative increase in their standards of living, whereby I always say, number one condition is peace. You don't want to have a war that would destroy a lot of the prosperity we have achieved over the last 20 years.
Are you invested in India currently, Dr. Faber?
I have an ETF.
Oh, you have an ETF. So it's
and I have bonds. I have bonds of a number of Indian companies because they have a relatively high yield.
And when you are investing in India, so you manage a fund which is denominated in which currency, if I may ask?
Well, I mostly manage funds denominated in US dollars. These are individual accounts.
Okay.
But some are denominated in Swiss francs and euros.
Okay.
And here I want to introduce another point that is important, because you started out the discussion with highlighting different perspectives. You see, say a Swiss-based investor, he's in Switzerland, he has Swiss assets, he may have a factory or he may have a service business in Switzerland, and he has assets of $100 million, or in our case, 100 million Swiss francs. How should he value this 100 million Swiss franc? In Swiss francs or in US dollars? That is a decision he has to take. You cannot switch every year the valuation depending on the result. As you know, this year, the Swiss franc is up 5% against the US dollar. So some of my portfolios I value in Swiss francs, but within the portfolio, the Swiss franc component is very small. It's maybe 15, 20% maximum. The other assets are held in euros and in Asian currencies, mostly in equities, and in US dollars, mostly in bonds. So everything that is not a Swiss franc, that is a foreign currency, that hasn't gone up by more than 5% against the US dollar, accounts for a small loss in my Swiss franc-based portfolio. You understand? Say, yes. Assuming I have 20% in Swiss francs, but 80% in US dollars, the Swiss franc goes up by 5% against the US dollar. The 80% that are in US dollars have a negative impact on my wealth in Swiss francs. So different people have a different perspective, and in a money printing environment, it's actually very difficult to say how much money you have. I think one anchor of price stability, it seems to fluctuate a lot, but actually it's more the paper currencies that fluctuate against it would be a basket of precious metals, gold, silver, platinum, or just gold. So the gold price over the long run in this money printing environment is likely to go up. In some currencies more than in others, but in general, money printing is good for the price of gold.
So when you see these projections, I know there's a very popular report by the Bank of America, which has been circulating for a few months, projecting that the gold price could hit $3,000 an ounce in, I think it was 1.5 or 2 years. Does that sound like, does that surprise you, or you think, of course, it can do that, it's possible?
Yes, nobody knows. You know, these forecasts, I don't hold very much. And I always maintain, I think everyone should hold some gold or some silver and not worry about the price on a daily or monthly basis, but with the idea it's a sound currency, you can multiply it, but in a very limited way. Similarly, I would argue that Bitcoins is a currency which you cannot multiply indefinitely. But I happen to feel more comfortable owning gold than Bitcoins, whereby gold has some disadvantages. Say, if your government says to you, you're not allowed to take gold out of India, and you have to flee India and you have to move somewhere else, and you can't take your gold along, then it may not be of great use to you. You understand? You have to kind of then consider, if you already take the insurance to own gold, where do you store it? Maybe you should store it in Singapore and maybe in Hong Kong, and who knows? But it's a consideration. But in the long run, I think it's not going to be the best investment because it doesn't pay any dividends. It doesn't grow like a company. If you look at, I don't know, Reliance over the last 20 years, it's been a company that has been growing. Or if you look at Tencent or Alibaba or Google and so forth, these are companies that have been growing. So the returns will probably be higher than in gold. But we're talking about the average person. How can he protect his assets? I think gold is one way. The other thing in India, unlike other countries, I think in the cities, real estate is probably too expensive, but on the outskirts of cities, it's probably still reasonable in the countryside. And as you know, Rahul, I guess you're in Delhi.
In Mumbai.
Yes. So we can today do business and communicate with each other from anywhere in the world. The condition is that the internet works and that the government does not switch off your internet, as happened in some countries. So, but basically, you can be anywhere in the world. That is a novelty, because previously, if you were in the financial sector, you had to be in New York, Mumbai, or Hong Kong, Singapore, London, Frankfurt, and so forth. But now you can be in the countryside. Similarly, before, if you were a merchant, you had to be in a city where they had fairs, where they had conventions, where the buyers came and so forth. Nowadays, it doesn't matter. Amazon, I suppose, is one of the largest merchants in the world, and they're essentially everywhere. So that is a new world. That has huge implications on the value of real estate in city centers
and I think
and in the countryside.
In India, has been particularly difficult because I think we already had an 8-year bear market in real estate, and on top of this, there's been this development because of which I think real estate values have been further hit. So that 25% of the portfolio in India wouldn't have done very well. But from now on, I think during the pandemic, there were good deals to be had. You know, you went to a property dealer and you could really extract a big discount from him to purchase an apartment. And then you can hope to earn 5-7% per annum over the long term.
Yeah, sure.
Yeah.
But you see, India, they had, a correction in real estate, as did Singapore and other countries in Asia. But in some areas, properties have actually gone up.
Yeah.
And also, before the correction set in, say around 2014, 2015, real estate prices in cities like Mumbai, Delhi, had gone ballistic. They'd gone up a lot. So a correction was overdue. But in general, looking at countries that are growing, like the US in the 19th century and early part of the 20th century, I think it was a good idea to own some real estate. I recently looked at the 50 largest holders of real estate in the world. It's interesting. All of them are very wealthy people.
Okay.
You know, people that had a lot of money and then they decided to buy a property in Australia the size of Switzerland. You know, they're huge countries.
Yeah.
Or even in America, people like Ted Turner, they have huge land holdings.
They have those massive ranches. Yeah.
Yes, and so it's interesting that a lot of financial people and others that have made a lot of money have these large land holdings, not just in the US and Australia, so New Zealand, Argentina, Brazil, and so forth and so on.
Yeah. Well, there's a lesson in there for our readers, right? If you want to preserve wealth over long periods of time, own some real estate, buy it well, but...
Well, the advantage of real estate, to be sure, is people who have money in real estate, they usually don't do something much more stupid with their money.
Yeah, you can't transact it fast. You can't,
yes.
You can't flip it.
Before they buy and sell and trade on a daily basis on Robinhood, with real estate, they're stuck into something.
Yeah.
And that's why a lot of big wealth in the world has owned real estate for a very long time.
Yeah. It's true. I buy that completely.
By the way, the largest holder of real estate in the world is the Catholic Church. Yes, this is because they get under some pressure, some modest contributions. So when people die and they have no heirs, they give it to the church. Not in my case.
Okay, moving forward. So a while back, you mentioned that you have 25% in equities. And did I hear you correctly? You said a lot of it is in Asia?
Most of it.
Can you talk a little bit more about what countries excite you from a stock investing perspective?
Well, I have some because I live in Thailand, and I want to give you the reason why I would hold some Thai shares. It's not that I'm very optimistic about Thailand at the present time. In fact, I think the country is heading into a political crisis sooner or later. And economically, they're not doing well at the moment at all. But anyway, I live in Thailand. One of my concerns in the long run is the following. We live in democracies, and everybody has been taught at school democracy brings freedom and everyone has a right to vote and therefore has an influence on politics. This is all nonsense. What we've seen now with the lockdown is how a bunch of bureaucrats that are getting their salary regardless can tell a businessman, a small businessman, he may own a shop, he may be in the service industry, he may be a hawker, whatever, he may own a restaurant, he may own a bar or a coffee shop. They can tell him, you have to shut down your business, period. That is a huge and unprecedented interference into people's personal freedom. This has never happened before in history. So if they can tell you that, one day they can tell you a lot of different things, including you're not allowed to remit money from A to B. So if I'm in Thailand and I need to live here, I have my expenditures here, and I cannot remit money into Thailand from Switzerland or from Hong Kong, where my business is based, I need some money here. So I have real estate here and have a stock portfolio here in Thailand and cash. And I also have some gold here in Thailand because there's no use for me to have gold in Switzerland if I'm not allowed to bring it here to Thailand. So I already took care of having gold here in Thailand. In good English, I smuggled it in. Yes. The Indians are very familiar with smuggling.
Extremely.
Yes. So anyway, the thing that people have to think about, this lockdown is unprecedented in history. That you had lepers in former times and you isolated the lepers, but you didn't isolate the whole country. So this is a novelty, and I think this shows, as some philosophers have observed, that sometimes people feel free when in fact they are in chains. And I think that the process of democracy has been a huge success in lying to people what their rights are. They tell them, oh, you have the right to vote. But actually, most people have no rights at all. They can't really influence the decisions of politicians. And I think at the beginning you ask, you know, what will the elections have? What kind of an impact they'll have on the US? I happen to think that whether Biden or Trump are elected, not much will change because the country is run by the Washington oligarchy. In other words, it's a very small group of people that run the country. They have 2 or 3 figureheads. One of them is Trump for some people, and the other one is Biden for some other people. I don't think either one is capable to really run a complex issue as a country. So the people behind run it to their benefits, not to the benefit of the individuals.
Okay. So, so you have some shares in Thailand, and that's mainly to meet a requirement that in case you need. Any other country?
Then I have shares in Hong Kong, in China, and in I have quite a large holding in Singapore, Malaysia, and then, as I said, an ETF in India,
so if
and Indian bonds.
Okay. So if there was someone in India who wanted to diversify his portfolio, and he was looking east, which is the 1 or 2 countries you would suggest that he take a look at to maybe buy an ETF or buy some stocks?
Well, it depends a little bit on his investment strategy and his discipline. I think looking east, Hong Kong is very cheap.
Okay.
It's a very inexpensive stock market. Property stocks sell at a 50% discount to net asset value. For good reasons. The property price in Hong Kong will go down. I don't think it will go down by 50%, but it's in a downtrend. And there are some problems, but you know, at this discount, I think there's some value. Number 2, I think Macau gaming stocks are reasonably priced. And number 3, you may dislike China and its leadership and their behavior and whatnot. But the fact is, there are some very good companies in China, and it's going to be a huge economy, and some companies will be very dominant in the world because of the size of the market. You take, say, an automobile supplier like Fuyao Glass. They supply windshields for cars. They have 70% of the market in China. Once you have 70% of the market in China, you're essentially already the largest glass supplier in the world. They have factories also in America and so forth. So these companies will be very dominant. A local Thai glass manufacturer, in my opinion, has no chance to compete with them. But what can happen is that Fuyao Glass will buy out the local Thai manufacturer in China, in Thailand, sorry. So I think there is in Asia another thing that will happen, mergers and acquisitions. A lot of companies will be taken over. As you know, in India, retail is still very fragmented. So a lot of consolidation will still occur. And that offers the opportunity. But as I said, aside from Hong Kong, because they're cheap, I also believe in the future of Singapore. And I believe that in China, there are some companies that are very interesting in the long run. And also both India and China, as you may know, is very underweight in the MSCI World Index compared to the size of GDP within global GDP. So over time, I think that the weighting of China and India in the MSCI World Index will go up, and then institutions like endowment funds, pension funds, anyone that has an index bias, for them, it will not be a choice whether they like or don't like to invest in India and China. They will have to, they have to be forced to buy India or China as soon as the weighting in the MSCI index goes up.
Sorry, you want to?
That is a fascinating point about specific stocks that will benefit in the long run. Dr. Faber, if you wanted or if you were bullish on India, what would be the areas where you would be looking at? I believe last time when we spoke, you had briefly mentioned tourism as one of the opportunities. Would you still bet on that? Would you be interested in real estate or utilities? What would it be?
Yes, I mean, my view hasn't changed. Of course, COVID has had an impact on anything to do with traveling, but it has rather boosted the case for owning a house in the countryside or on a beach or in the mountain, away from congested areas like Mumbai, Delhi, Chennai, and so forth. So the case for having a second home, in my view, has rather increased. Now, one of the worst venues to catch an infectious disease is, of course, an airplane. You're congested in a small room with air that is filtered, but it's not 100% clear through the filtrage. So I believe that we will have to have a lifting of travel restrictions before the theme of tourism. And India is big enough to live from inland tourism. It doesn't need a lot of foreign tourists. So that is big enough. But of course, foreigners would be the icing on the cake, because a lot of foreigners come to India. They are relatively well heeled, aside from the backpackers, but they're also, people that stay in 5-star hotels. So I think the theme is still well and alive. And
Okay.
that is what I would do. I would invest in real estate, and I'm not familiar with plantation companies in India, agricultural plays. But in Asia, we have a lot of soybean, palm oil companies. These are companies that own a lot of real estate. Or we have rubber plantations, and we have all kinds of plantation companies. So these companies, I think, are quite attractive in the forthcoming environment of rising agricultural prices.
Okay.
By the way, I suppose that if agricultural prices go up, it would benefit the Australian dollar and the Canadian dollar.
Okay. Okay. So crystal ball gazing a little bit. Looking out 3-4 years down the line, Dr. Faber, how would we remember the COVID episode?
Well, 3-4 years, I don't know, because we may be in a totalitarian regime, whether it's leftist or more right-wing, who knows. But I think democracy in the Western world has failed, and is probably going to be replaced by some dictatorship.
Okay.
How unpleasant that might be, we don't know. You know, we had Hitler was a dictator, he was vicious, and Lenin and then subsequently Stalin were communists, and they were equally or more vicious than Hitler was. So you can go both ways. You can have a leftist or a right-wing government, and both are very devious and vicious. In China, we had Mao Zedong, who wasn't particularly a pleasant character. And in Latin America, we had the Somozas of this world and the generals in Argentina and the Pinochet in Chile, and in Spain we had Franco, all relatively unpleasant characters. Now you may say, okay, what about the US democracy? How many innocent civilians have they killed and displaced in the Middle East? Well, the figure is over 5 million people. This is probably the largest displacement of people that anyone has ever managed. You know, from essentially the White House or from Washington. And so the world is as you said, you know, depending on what your perspective is a very cruel place. But I think future history books will comment about democracies and say, well, in the 19th century, the idea came up that people are equal and so forth, and that they should have equal votes. It took a very long time to implement. I mean, in America, until the 1960s, not everybody could vote. And until, I think it was 1921 or so, or 25, when women were finally approved for voting. And in Switzerland, it was in the 1970s that women were allowed to vote, not before that.
Wow.
And in some cantons, until about 1995, women couldn't vote.
Oh, wow.
Because we have a federal government where the local communities have a lot of power. It's very decentralized. So in some areas, women couldn't vote until, you know,
1995. My
yes,
God.
exactly.
Wow. So the history books are not going to take kindly to democracy.
So anyway, they will then talk about this democracy, and they will probably highlight the idea that everybody should vote as a ludicrous idea, because in the 19th century, only rich people in Britain and very few could vote. Or when people talk about the democracy of Greece. This is nonsense. Only noblemen or citizens of Athens could vote, nobody else, and so forth. So it's always been a very selective group of people. Mm-hmm. And anyway, they then will say that democracy promised freedom to everybody. And when there was
COVID,
a serious flu
mm-hmm.
called COVID-19,
yeah.
They closed down the global economy
mm-hmm.
and used this illness or pandemic as an excuse to put people into chains and control them and so forth. And so I don't think the history books will be very kind towards the government's reaction to COVID. And I don't think that future financial history books or economic history books will be very kind towards the current leadership and in economic policy matters, such as central banks. I think the central banks will be criticized very heavily. How could it be that there was a time when people thought that the government could borrow money endlessly, that it would not cause any long-term damages? How could they be stupid as to believe that handing out money to people without doing anything would be a favorable measure? And so forth and so on. I think the history books will be extremely critical about our period in economic history.
Yeah. So we only have a few minutes, so we have to get a few questions through, so we'll kind of rush to them. When we spoke to you in December 2018,
18, yes.
18,
yeah.
You told us you gave us fascinating life lessons, of course, and we'll link to that podcast so people can listen to those life lessons. But one thing you told us was that, which I'd never read about you, that you are also an architect by qualification. You actually design buildings.
No, I'm not an architect qualified, but I built my office here in Chiang Mai, and I didn't build it as workers. I mean, I don't know how to do the carpeting work and the electrical work and so forth. But I basically made the design and I gave it to an architect so he could measure the dimensions, because he has to give it to a contractor.
Yeah. You mentioned in that talk that there is a project you're working on now. Do you recollect what was that project? You created a lot of intrigue and curiosity around that.
Well, I had a project in Vietnam. I have a house because my partners and I, we built a hotel. It was later sold to Four Seasons.
Oh, okay.
I have a house there, and adjacent to my house is a village on the beach. So it's a fisherman's village. And I bought the land adjacent to my house. And I then commissioned, there are factories, I mean, artists that create Buddha statues and other statues in Vietnam. And I then is marble, because in Da Nang, which is between Hanoi in the north and Ho Chi Minh in the south on the beach. It was the largest base, American military base during the Vietnam War. In Da Nang, they have a Marble Mountain. It's one of the few places in Asia where you obtain high quality marble. Anyway, I built a very large, almost 4 meters tall Buddha statue.
Wow.
And I built a stand and I put it on my land next to my house.
Okay.
Then the government came and said, oh, we can't tolerate such religious objects in this area. You have to take it away.
Oh my God.
So I wanted to actually create kind of a place for people to come and enjoy the sea and to enjoy a quiet minute in a kind of a nice, in the spirit of the teachings of Buddha. Anyway, the government forced me to remove it. So that
so
project ended up in tears.
The government, the heavy hand of the government. Huh?
It's everywhere the same. You have these minor bureaucrats that have that are nobodies. But in some situations, like when you go to a counter of an airline, at that particular time, for 5 minutes, the employee behind the counter has you by the balls. Because she or he can tell you, oh, I cannot find your reservation.
That's right.
You understand?
Yep.
And or the custom officer or the immigration officer, he can delay you in such a way that you will miss your flight.
Yeah.
So in those situations, no matter how powerful you are, you better kneel down and be nice to these minor, insignificant people that want to make your life difficult. And you have to pardon them.
Yeah. Okay, great. Dr. Faber, would you want to recommend any reading material for our viewers and for Sarit and I?
Well, I think that I recommended already many books.
Yes, you have.
I've recently reread Marx Capital. And I've read a lot of books about the Bolshevik Revolution of 1917.
Okay.
Because it's very interesting, the background, how it happened, and how vicious it then turned out to be. This is frequently not discussed a lot in the Western world because the architects of the revolution and the ones that implemented the policies of cleaning out entire areas were actually Jews. The Jewish nation. And so this is not discussed much in history. They discuss the atrocities of Hitler a lot, but they don't discuss much the atrocities that essentially Lenin committed. In fact, he approved the summary murder of the entire Romanov family. This was the Tsar family. This was the Emperor of Russia, including his 4 or 5 children, who had really nothing at all to do with any politics. They were living in a different world. So we have revolutions that create, and this, I always tell people that support BLM, Black Lives Matter in America, this is a group of people that is not peaceful. They want to destroy. There are revolutions they build. Like when socialism broke down in the late 80s and you introduced market economies, you can say it was a reform or a revolution towards a free market, towards the capitalistic system, towards liberal economics. And that was a constructive change, a constructive revolution or reform. The move towards socialism in every country involved destruction. That's the big difference. And when Bertrand Russell was asked, you know, who do you regard as one of the greatest philosophers of the last 150 years? He said one would have to regard Karl Marx as one of the most significant philosophers, historians, because he had such a big impact on the world. And then they asked him, well, are you impressed with what he's achieved? He said, no, the problem is Marxism is not a kindly philosophy. You know, it's not something like the teachings of Buddha are something that is good for your soul. It's good for society. It's good for peace. And it's good to cement humankind, mankind among each other. Communism and socialism, the philosophy behind it is, as Lenin said, you cannot have a revolution with white gloves. You know, you need violence. And this is the difference you need in order to introduce socialism, communism, you need violence.
Yeah. And I think the message that I take from what you said is that it's very important to read history, because that gives you a glimpse of what could happen in the future in this whole quest for socialism and, you know, that's happening, Black Lives Matter. It pays to look back so that you are better informed of how these things could play out. Sarif, do you have any question for Dr. Faber?
Not exactly. I mean, it's been as usual, a fascinating conversation. Whenever
Yes.
we speak with Dr. Faber, we always learn something new.
Yeah.
And this time we learned that even a failed philosophy of Karl Marx can teach us so much about what could happen in the future.
That's right. Yeah, well said.
Yeah, it's
well
amazing.
Said. Yes, yes, great. Dr. Faber, thank you very much for the time.
My pleasure. Thank you very much for having me.
As always, very, very thought-provoking. I think you shared with us a lot of information. All of it, a lot of it, I think, is very actionable for people to actually start thinking how it gels with them, their personal lives, their personal portfolios. And I think we're all better off after this 1 hour. So thank you.
Well, I hope so. I'm not sure. But,
oh, 100%. Thank you.
Anyway, I wish you and your viewers a wonderful festive season.
Thank you.
And good fortune.
Thank you very much, Dr. Faber.
Well, thank you very much.
Thank you so much, Dr. Faber.
Pleasure. Thank you.
Bye-bye. Thank you.